Welcome everybody back to the Trader's Mindset series. If you are new here, I would recommend you watch the rest of the videos in the series. We will put a link above so that you can go check those out. We have covered tons of topics in this series based around mindset, discipline, patience, things of that nature. Today is going to be a little different because today we are going to go over psychology. And I know I hear all of you out there already talking about this reality. Psychology? Come on now. Topic of today's video is understanding market psychology, trading against the crowd. But when I use the term psychology, what I'm talking about is others' psychology, the psychology that's actually being used in the market. Has anyone ever looked up social proof? Psychological phenomenon where people tend to copy the actions of others to determine how to behave in a given situation. And essentially, this is the same thing as herd mentality, tendency for traders to follow the majority to feel secure in their decisions. For example, when prices are rising rapidly, more and more traders may pile into a trade believing that everyone else can't be wrong. This is the classic example of herd mentality. And as you know, if you followed along with me on the live streams, we're looking for exactly the opposite of that. 98% of traders fail. What are we looking for? We are looking for where those failures are going to take place so we can trade into the stop losses. And just think about it like this, right? When you hear the word FOMO, fear of missing out, traders often follow the crowd due to factors like FOMO and the fear of missing the move. And you're going to see this a lot, especially when we're talking about news events, world events, things of this nature. You're going to see a confirmation bias, if you will, when traders seek information that confirms the crowd's view, ignoring contradictory information. And we've talked about this on stream before, right? When you wake up and you say, okay, the news is going to be this, the news is going to be that, the fundamentals are this, the fundamentals are that. We've got bullish bias today, we've got bearish bias today. And the problem with all these things, guys, is once you have a bias, you're more likely to follow that bias than actually pay attention to the chart. You want to see what the market's doing. You want to see where traders are entering, where traders are exiting, where traders' stop losses are. Not just, I've got a bullish bias, so therefore I'm going to be looking for longs. Because I promise you, if you're looking for longs, you will find them. But you're going to ignore where your potential short positions could be placed because you're only thinking of one side of things. It's just like how people think negative and positive. And they talk about this a lot when you're talking about mindset. If you approach a situation and it is a negative bias from you, then you're going to see the negative in that situation. Same goes for positive. So if one person approaches a situation with negative bias, somebody else approaches the situation with positive bias, they both see the exact same situation. However, both their views on the situation are opposite of one another. Not because it's a different situation, not because it was actually a negative thing or a positive thing. It's just the way you approached it. Hopefully that makes sense. It's going to be the same thing with approaching the market with a bullish bias or a bearish bias. And this reminds me of a story, guys. I don't know if any of you have heard it. And it's called The Farmer's Luck, or The Farmer Lost Their Horse, or something of that nature. If you guys haven't heard the story, I'm going to go over it right now. There was this farmer. One day, his horse took off and fled for the hills. His neighbor heard of this and came to sympathize over the farmer's bad luck. But the farmer replied, "Bad luck, good luck, who knows?" The next week, the horse came back to the farm with a whole herd of horses from the hills. The neighbor congratulated the farmer on his good luck, to which the farmer replied, "Good luck, bad luck, who knows?" Then, as the farmer's son tried to tame the wild horses, he fell and broke his leg. Everyone thought this was such bad luck. Not the farmer. He thought, good luck, bad luck, who knows? Some weeks later, the army marched into the village and conscripted every able-bodied person they found there to go to war. When they saw the farmer's son with his broken leg, they let him off. Is that good luck, bad luck? Who knows? And And the whole purpose in this story, guys, is if you have a bias and you're looking at it and you're saying, okay, well, we are bullish, then you're always going to see the bullish sentiment. You're always going to see a reason to go long. Same thing goes if you're looking at things in a bearish perspective. You're always going to see the bearish sentiment. You're always going to see reasons to go short. But like the farmer, if you look at everything as who knows, then you're going to actually watch the market and find your own reasons to enter because you see it on the charts, not because you have a bias and think, bad luck, good luck, who knows, right? And it's not so much luck at the end of the day when we're talking about trading. It's your bias and how you're looking at where the market's headed. And if you've already got this thought process in place as to the market is going to go up, then you're going to easily find reasons to confirm that the market is going to go up. Same thing goes if you have a bearish sentiment. You're going to find reasons to confirm that the market's going to go down. It's just how our mind works. Just like you can always find positive in something and you can always find negative in something. However, if you approach this market with absolutely no bias, what you'll see is you can actually see your chart. You can actually make educated decisions in what the price is actually doing right now, where the traders are entering, where their take profits are, where their stop losses are. And this is how you take advantage of the market. So if someone sells right now, they're a future buyer. No matter if they hit their stop loss, no matter if they hit their take profit, they have to buy to get out of that position. But for me, I want to take advantage of where these stop losses are. And why is it the stop losses? Well, anybody that's attended my streams, anybody that's watched any of my other educational videos understands that the reason that we're going after stop losses, if traders are short, a majority of traders, then all their stop losses are just above the highs. That leaves clusters of orders in one particular area of the chart. If we were using bias in this to say price is going up, price is going down, then we may miss the opportunity of actually paying attention to the traders entering and where they'd place their stop losses. Hopefully that resonates with you guys and you understand how it is that just your thought process going into, and this is anything in life, it doesn't even have to be trading, but just that thought process of, hey, I'm positive or I'm negative, you're going to find reasons for confirmation on each of these sides, right? Bad luck, good luck, who knows? You really want to keep that thought in your mind as you're doing these things. Instead of giving the thoughts and following the crowd, as most people do, expecting that things are going to be bullish, expecting that things are going to be bearish because news said this, or your social media influencer said this. Actually pay attention to the chart. Pay attention to where buyers are coming into the market, where sellers are coming into the market, what areas in the chart are reacting due to orders coming in, and where are their stop losses. Are these positions failing? Are these positions winning? And everybody always asks me, how do you know if a position's failing? Well, you have to ask yourself as you get to an area, and let's just say a resistance area, a bearish order block area, a supply area, however you want to look at it. And all these are essentially the same thing, guys. Go draw it on a chart. Pull a Fibonacci for your Fibonacci retracement. Draw in a trend line. Put a resistance area. Put a supply area. Put a bearish order block. And you're going to notice that they're all in the same area on the chart. These are the areas that I'm looking to trade, where all these strategies come together. And everybody will say, but you can't tell where they enter because everybody enters in a different place. This is 100% correct. Even if you say an SMC trader, some enter on the order block as soon as it pierces the order block. Some enter at the 0.5. the entries are always a little bit different. And this is why the stop losses get ran. Because unlike the entries and the take profits, all the stop losses are generally in the exact same place. This is why none of the strategies matter as to where entry and take profit is. The only thing that you're looking for is an area in the chart where most traders will be short. Resistance, bearish order block, trend line, Fibonacci retracement, supply area, however you want to look at it. People will be shorting there. Now, where are they going to take profit? For an SMC trader, it's going to be risk to reward. So where's that going to be at? You can see this on a chart. ICT trader, essentially it's the same as SMC. ICT created SMC, so it's all the same thing, guys. People try to argue that fact as well. Now, supply demand trader, where are they going to take profit? Obviously at demand. You've got your support resistance traders, where are they going to take profit at? Obviously at support. And these are going to be the same thing. When you look at your support, what's it going to be? Demand. If you're looking at market structure, that's going to be where the demand is. Where's your bullish order blocks? Exactly the same place. If you wrap your head around this in that terminology, you can really see the reactions of where traders are entering the market. Now, in order to see the failure of these positions, it's real simple. It doesn't make it to their take profits. That's all. So now they're in the positions. And you say, okay, well, so that's trap traders. So we use things to see trap traders. You can do it how you please. For me, it's just the candles, guys. It's just the candles coming down. You'll see the top wick. Why? Because shorts entered the market. Right in these areas, the top wick comes down on the candle. Obviously, you're going to see this. Why? Because shorts have entered. Now, what do you need for shorts to take profit? You have to hit their take profit areas. If you don't see a take profit area there, and they're never hit, well, what do you got? You've got the closure above, exactly what we look at every single day on the live streams. You got the top wick, and then you got the bottom wick. Next candle opens up, pushes a wick down. Why is that wick pushing down? Trying to get the price down for the shorts. They've entered short. Your bottom wick comes down, but now what happens? It starts coming back up. So what are we looking for? We're looking for the flip of that candle. We enter on the flip, put our stop loss below the bottom wick, and where do we take profit? Take profit 1 is the recovery of the top wick. Why? Because that is those shorts' entry point for the most part. It's going to be somewhere around there, where their stop losses above the highs. Everybody's stop loss is going to be above the highs. So we take profit 1, secure, go +1, and then wait for that top wick to break on the previous candle. If you see that, you'll see the reaction of the stop losses being ran. And it happens time and time and time again. Super simple strategy, super simple trading, just trading against the crowd. That's all we're doing. We're trading against the 98%. We're trying to take advantage of their stop losses. The reason that people get so confused about the way that I trade is you have to have those things take place. The shorts have to enter. Without them entering and pushing the price down, there's no stop losses above. You have to see those entries come in. Their entries have to fail. Have to see these things happen. So it has nothing to do with what my thoughts are of a bullish or bearish market, what my thoughts are of where price is going to go, what's going to be the high today, what's going to be the low today. None of this matters to me. Only paying attention to the traders coming into the market and their positions failing so I can take advantage of their entries first for TP1. What do most traders do? They'll go break even because they're weak-handed. So they go to break even once it goes in their direction and then comes back on them. And that kills all their buddies that were trading exactly the same way. Because what's that break even? Those now are long orders to help push price up. So basically what this is, guys, is developing a contrarian mindset. You're looking for opportunities in situations where others might see fear or greed and acting against the prevailing sentiment. And it doesn't mean trading against the trend. That's where everybody gets so confused. People will say, well, then you're counter trend trading, right? No, because a lot of times the traders are counter trend trading. You understand what I'm saying? When you say a bearish order block, well, what is that? It's going to be a counter trend trade. If price is going up, they expect that to be high. And if you were on the stream when we started making new highs on gold, what did we see? We talked about it every time we made a new high. The shorts were coming in. The shorts were coming in. Well, why would shorts be coming in counter trend if we're trading counter trend? Because trend makes no difference to how I trade, guys. Makes no difference at all. I could care less what the trend is. I could care less what the news is. All I care about is the other traders. I'm not trading gold. I'm not trading a number on the gold chart. Most times I couldn't even tell you what gold is at. If you ask me right now, what is gold at right now? I have no clue. I don't look at those numbers. Don't care. It makes no difference to me. To me, all it is candles on a chart. That's it. What did them candles do? How did them candles react? Where is the market structure? You don't even have to put numbers on my chart. I don't need them for nothing. Makes no difference to me. You can take all the values of gold off of my chart and just show me a blank slate with candles. That's all I need. And then I can watch those candles build, watch people enter the market. That's all there is to this game, guys. Doesn't matter what somebody says gold's going to go to by 2026. Who cares? How are you going to take advantage of a move right now, today, with what's going to happen by 2026? You can't. All these people who come out and predict what the price is going to be doesn't make a lot of sense to me. That's fine. You predicted what the price was going to be. Gold going to be zero? Is gold going to be $10,000? Who cares? I don't care. Just as long as the market's moving. That's all I care about. We're trading the movement. We're not trading a price value. We're not trading the news. The news is bullish. So what? What do I care? If the traders aren't bullish, I don't care if the news is bullish. That's all that matters to me. If the traders are bullish, then I'm shorting the bullish news. Being 100% honest with you. Why? Because I'm trading the traders. 98% of traders fail. Why would I not trade against them? So am I trading the trend? Am I trading against the trend? That all has to do with what the other traders are trading. Some people say, well, you're a breakout trader. No, I'm not a breakout trader. But that trade you just took there was a breakout. That trade may have been a breakout. The only reason that I was trading it was because all the traders were short. So at any given time, I could be a trend trader. I could be a counter trend trader. I could be a breakout trader, as people like to label it. I could be a whatever you want to label it. To me, labels are super overrated. I consider myself a stop loss trader. That's it. I trade where stop losses are sitting. Call it the reality check, TRC. But beyond that, there's no bias or anything else that goes along with it. And that's, I think, where people get hugely confused of how my strategy works. And the whole thing is when you're thinking about it in terms of stop loss hunts, your large players are going to target areas with high stop loss orders to trigger liquidations. That's the whole thing at the end of the day. It has nothing to do with what the news said, what the fundamentals are, none of these other things. At the end of the day, it's just got to do with where the stop losses are sitting. I hope that makes sense to everyone. Like I said before, this is how psychology comes to play. I know when you guys see the psychology title, some of you think, oh great, we're finally going to get into psychology. Others of you think, I've been here with reality for years. Reality isn't the psychology type. And you guys would be right. I believe in mindset and I believe in discipline. And I went over that in the discipline video. For any that hadn't watched it, go back and check it out. However, in this instance, we are trading others' psychology. And at the end of the day, that's all I'm doing in these markets. I don't trade gold. I trade the traders that trade gold. And that's exactly the case. Only trading what the traders are doing. That's my best way to take advantage of this market. And it's all right there in the charts. There's nothing more to it than that. Do I pay attention to when news comes out? Yes. That's just to make sure that I'm secured my position because you expect volatility. Do I see what the news data is? No. Doesn't matter to me. The charts are going to show me what direction I need to trade. The news release has nothing to do with it for me. And it's funny because people who do pay attention to the news, they'll say things like, well, news was bullish. I went long. It went against me. Hit my stop. I guess it was already priced in. We can make all the excuses we want, but at the end of the day, the market moved the way the market moved. It wasn't because it was already priced in. It's because that's what was going to happen. Everybody likes to use all these terms and give excuses for why things didn't play out the way they thought it should have played out. And this is the same with everything. People are going to say, well, this didn't work out because of blank, and that didn't work out because of blank. Really sit back and start looking at the excuses that you're giving as to why these things did or didn't work out. Pay more attention to what is actually happening on the chart, and you'll see that none of that makes any sense. Go back, X out whatever your excuse was, and actually look at the movement on the chart. Look what actually happened there, and you'll see that the reason that you took your stop 9 chances out of 10 is because you had bias and you were believing that one thing was going to happen, and it went the opposite way. All because your bias was there because of X. And figure out what X is. And if it's got nothing to do with the chart and the candlesticks and how they're actually moving and where the orders are actually coming in, then maybe you need to recalculate your plan, your entry method, your reasoning for getting into a trade. Just food for thought, guys. Hope you guys enjoyed this video. If you have any suggestions for any other videos that you want me to put out, let me know. I know this is probably going to be one that's a little less popular for most of the people out there. There's a ton of fundamental traders and news traders and everything else. And if it's working for you, like I've always said, by all means, stick to it, stay with it, and continue to profit. If you guys like the video, give it a thumbs up. Want to see the videos in the future? Subscribe, hit the notification bell so you'll be alerted when my next video comes out. Leave me a comment, let me know your thoughts. And as always, guys, stay consistent out there.